Hi guys, Market Outlook. Today is Sunday, the 29th of September. Weekly outlook for next week. A bit sick here, not feeling so well, and that's kind of reflective what markets currently show us. We see some sort of negative setback or basically a background from the economic side, especially in the US. The S&P 500 kind of weakening a slight bit. The Nasdaq slightly lower. What the DAX is doing, we want to find out here in our call, as well as what the dollar is doing. The greenback is getting us some potential news this upcoming week. Let's focus on markets and the news events. We got a couple of news events coming up tomorrow on Monday, and they might be of influential nature. Starting Monday, we'll get some sort of information. This upcoming week, are there drones in Denmark? Are there some identified flying objects, is what some people claim. Let's observe, and how the situation is going to unfold might be worth a shot and worth a kind of at least to get answers from the governments. But that's on another note. Tuesday, we start in China with the Manufacturing PMI, Purchasing Manager Index. And guys, I would urge you just to pay some attention towards the Chinese market. We could take into consideration, by the way, as well, what we consider as something kind of worthwhile investing. And by the way, that's the Hang Seng Tech Index. The market and the index here is moving towards higher levels. The Chinese market back to what we have said in the past, kind of undervalued. Valuations are pretty low, and they might still offer us some further upside. And by the way, Alibaba, for example, one of the best performing stocks in my portfolio, I bought at roughly 90, 89 whatsoever, kind of doubled in value in not a long time span. They pay a bit of dividends, couple of cents at least. Not much, but it's at least worth consideration if I were an investor of your kind of particular interest. The news events this coming week as well kind of will go on further. In Australia, we got the cash rate. The interest rate is going to be kind of quite important for us, because the Australian dollar had moved kind of quite interestingly, and fairly recently, basically the past 2 weeks in a row, the market was celebrating some sort of, well, not celebrating, but the dollar strength causing other markets to weaken. The Australian dollar was one of the currency pairs in particular looking set to weaken further. Back in this case here 2 weeks back, we saw this technical pin bar candlestick pattern, which is, at least for us, the pure ignition of further weakness. And so it was happening. The market looks kind of quite weak. And based on the monthly chart, we can now say the dollar's reversal is playing out kind of quite nicely. Equities are not really losing some sort of steam. However, US markets, Nasdaq and the S&P 500 weakening. Risk sentiment losing some momentum, and that's exactly what's happening as well here in the Australian dollar. If the Aussie weakens, US stocks might actually weaken further. The month of September, usually in the past, has been quite negative. Now, we get some sort of different motivation at the moment, because now the Federal Reserve had started to cut interest rates. And that brings us to the next topic. With the Fed cutting interest rates, now we get liquidity, or kind of cheaper liquidity, finding its way to the equity market, usually helping equity markets to move somehow higher. Let's move towards the last and biggest news event so far this week, and that's coming from the US. Again, the non-farm payroll report. Expected at 51,000 newly created jobs. You guys remember the previous reading was extremely weak. 80,000 jobs from the past, 73,000 corrected upwards to 79,000 jobs. The forecast now for the last event was 75K, but it kicked in at 22K. And that's the pure expectation that this is and was used by the Federal Reserve to as well say, we see a transition between one regime to the other, used by Jerome Powell to basically cut interest rates moving forward. Now, if we see another weak reading like this, basically this could mean that the Federal Reserve is going to remain stable with their outlook, and potentially also expected basically twice this year to cut interest rates, and cheaper liquidity in the US would obviously support the equity sector until the negative array of data will kick in. Because that's for sure, the inflationary momentum, which had stabilized, is just not seemingly growing, and hasn't grown during the recent news reports. And that's simply what's just going to help the market moving forward. Now, looking back this week, we got this week, just 2 days ago, the core PCE price deflator, which came in at 0.2%. The GDP from Canada, slightly better, but we leave and we remain in US markets. That prices which are not rising, obviously, are giving us kind of the full story, or giving basically Jerome Powell the full opportunity to cut rates without basically harming the economy of some sort. The biggest story, obviously, is currently that if Jerome Powell cuts rates too early, he would start to offer a further inflationary momentum for markets. But that seems to be not the case. Moving forward, we should also talk about US markets now, and should check out how the US indices are going to perform, because the recent momentum had started to kind of fade somehow, the positive momentum. And that's what we can see in the Nasdaq index. The Nasdaq basically last week here had gone slightly, or had moved slightly higher. However, on Friday then last week, the market fell towards and was trading within this trading zone. Yeah, so now the market closed this week, weekly charts, in not a very negative candlestick pattern, right? So we've seen this a couple of times here, but this looks like that's a doji candlestick. The doji's focus pushes then back market participants towards the previous candle. So we had the array of up candles here. Blue color means higher prices, and now the market this week closed within the previous candlestick, and a doji means you focus on the previous trend. If the previous trend was positive, we should expect the market to remain in a positive momentum mode as well. And that's exactly how and what we see if the market is going to move basically beyond the high point here, which is roughly the 24,800, 24,850 price range. That's for the Nasdaq. For the S&P 500, we see the same story. Monday momentum higher, Tuesday, Wednesday, Thursday lower, and Friday the market moving higher again. A typical momentum week, which is Mondays and Fridays, just can be eliminated in a way of the market momentum, as those 2 days are usually the beginning of the week and the end of the week retracement days into either direction. The S&P is just looking similarly positive, hence, and the upside might continue. The market's mode, as in the indication here, when we are looking at the MACD indicator, we saw that the daily charts were kind of slightly on a weaker note. However, looking back towards the daily candles, the weekly candles, they remain quite positive, and we still see that the upside potential might be due to continue. As said, we have the two important pillars. The first one, liquidity supply, and cheaper liquidity ignited by the Federal Reserve's interest rate cuts would help cheaper liquidity, or more liquidity, coming back to markets, helping the entire environment. Plus, economic data have not been utterly bad, right? So that's exactly what helps pushing markets to higher levels, and is potentially at least causing the market motivation to remain on a positive note as the market motivation is concerned. Looking forward, we got also the JOLTS Job Openings. So which are the open positions, and these job openings had also declined 2 months in a row already. We shall look into the news event here based on the economic calendar, the recent 2 months, and we can see still above the 7 whatever million. But if we're looking to the hundreds, it's like just 200,000 jobs less on offer, which means companies don't have open positions or open job openings as the figure is concerned, and this gap has been widening somehow, right? And the number is expected to weaken even further, and that tells us the economic situation might remain a bit tense looking into the US, and that's exactly what could help markets into either direction. A weaker number plus also a weaker non-farm payroll number might actually be used by traders, by market participants to expect the Federal Reserve cutting rates even further, which in turn might help also the markets, stock markets to move higher. But in turn, we can see as well, and that's now back towards the question, what is the US dollar doing in general? Because the greenback recently had basically started to weaken as we examined with the Aussie US dollar currency pair. Now, looking into the British market here, the pound against the greenback as well is and has been kind of correcting somewhat. The market ended this week. We are still in our short position. This week was kind of quite fruitful for us here with the pound US dollar trading weaker. The market looks still set to potentially weaken further. Now, the market now has fallen back, right? So bearish candlestick 2 months ago. That's the monthly chart. This last month started to push market motivation slightly higher. And this current month also looks like the market is not going to be able to break above the high points, bringing us back to the point the weakness might continue. We might see that these couple of trading weeks, trading days in the month of September could end in a bearish pattern. And that's exactly how we see when looking at this from the candlestick perspective. This supportive range was broken. The market fell to the downside, now pushed higher, but actually stopped at this level. And now if the market, it's a bit kind of troublesome here, if the market doesn't break the upside here, which it hasn't, which is now the resistance area, we could see that the market, that's correct, will push down towards the lower range here. The important support areas now changing direction, previous resistance turning support, and so on, and now giving us the opportunity or the idea potentially to see that downside momentum will continue. And that's, guys, the same story with all the other markets as well. We have the same true with the euro. The euro, on the other hand, is just not extremely positive. Wrong chart. The euro has been weakening on, or has traded weaker on a weaker note. Comparing the two, the euro and the pound, we see the euro was riding somehow higher in the recent couple of weeks, just slightly, but it was moving slightly higher if we're comparing the candlestick pattern here with the upside, whereby the pound was just starting to depreciate and looking kind of to weaken even further. So there is the market motivation here, and that's obviously kind of the pure interesting markets and charts we keep focusing on. Again, if we see some dollar strength, we could see also the Swiss franc moving somehow higher. We got the interest rate decision just a couple of days ago this week, and it was not no change was given basically. So the dollar, the US dollar, is also starting to appreciate. Looking at the candlestick here and the pattern in general, we can observe that the recent and the current basic support zone has been kind of helping this market to rise, and really just at the sharp push here, the market might now push towards the, let's continue this zone with the 50 moving average here. The market broke above this, not quite yet, that's not a correct candlestick pattern and a trend line. The market broke above this falling trend line. Remember, we see that the wicks had a given way and the market broke above it. Long story short, I see some more opportunity here in this market. The dollar against the Swiss franc, at least, it looks kind of quite set to cause the US dollar to appreciate and the Swiss franc to basically weaken even further. Dollar Swissy hands looking set to potentially push back to the upside. The question now in general is what's going to happen in US markets, and in particular with the risk sentiment. We see some interesting moves in regards to the crypto space. Now, looking into the gold market, we see that gold has been rising sharply as well. This entire recent couple of weeks, the entire month of September has been extremely positive, as we can observe. Yeah, so the breaking point was this breakout to the upside. The market gave way to appreciate even further. This entire conglomerate of sideways candlestick patterns was just left behind. the upside's just helping the momentum here. We are trading close by the 3,900 US dollar per ounce price, which just a couple of years ago, actually 2 years ago, the sky was the limit in terms of 2,000 roughly US dollars. We have recently more or less doubled in just merely 1.5, roughly 2 years of trading. Kind of quite interesting. Question is, do other people know more than we know in financial markets? My clear answer, for sure, yes. And hence, the upside has a reason. It's not only central banks which buy in the ranges of tons of gold, but the general motivation here, and in particular, the extreme weakness in the market, is what we can observe. And another token here is silver. Silver already kind of is trading close by the historical level of 48, roughly the 50 US dollar range. We traded in the year of 2010, just 15 years back, at roughly shy of 50 US dollars per ounce, and that's kind of quite a push. Again, you can bash me maybe for this. I remain in my little short position. It's not a big one, but which is basically down at these levels. I expect the markets to weaken at some point, especially if we see some economic saturation in markets and a bigger push to the downside here. So let's observe how the market continues with silver. However, the market's trend remains unchanged. The market still pushes to the upside. It remains extremely overbought at the current range here. We've seen overbought levels historically kind of quite a couple of times. All of the levels had been retraced sharply, and that's exactly why I remain with my opinion that the market here up there at a high point, and we could even mark some sort of Fibonacci levels if we would want to, right? So up to the upside here to then see the market dropping significantly to a certain percentage range if we would want to. We see the same here happening with this market. Up at the extreme level, the market corrected through and towards the 61% range Fibonacci extension. If we mark the same and say, for example, the market might push all the way towards this high point again, the 61% range would give us still a sharp correction at some point, potentially. Whether the market is doing that, or whether the market at least drops at the high point, that's just a hypothetical price point here. We can see maybe the market kind of rises again towards 50, 60, 70 US dollar per ounce price. The point being, the economic demand, in particular with eco-friendly ways of moving forward, artificial intelligence, obviously semiconductor industry still in need of silver. However, a price range and a price rise of pure silver will obviously be noticed, and hence this causes some economic setbacks as well, as the supply of silver will turn much more expensive. That's the tricky situation we see in this market. Looking to other commodities, we can talk about and should talk about oil. Oil prices had increased in prices also to some extent. We still remain in our weaker trading challenge here, if we would say so. The market corrected here. That's a strong technical pattern. And for the guys of you who have followed up our news calls here for quite some time, you can see off the resistance zone, the market looks kind of still set to weaken further. We don't have a trade open yet. We were looking into getting into short positions here. We said, look, if the market weakens, we could see that geopolitical tensions will play their way out, causing a potential price rise. That's exactly why we didn't add any trade here or any order in silver. By the way, guys, don't forget to check out our website, fxstrategies.asia, for further insights. Check out our membership opportunities and let us know. The oil market looks kind of currently, at least, set to rise at least slightly. However, the current trend, we are above the 50 moving average, and that's the blue range here. The blue line we can see here is just slightly falling. But what we see, the daily chart on Friday had given us a bit of a bearish looking candlestick, as in like a pin bar candlestick. And this might just indicate that the market is just maybe ready to weaken further. We can see also the weekly chart looking set to rise potentially somehow. Long story short, I don't have an opinion about this market in general, but I can clearly see that the market seems to be kept at around, and that's the round number, around the 66 US dollar price range. And that's some level which might call for some sort of further weakness as the oil markets trend might start to depreciate somehow further. It looks at least kind of rather saturated and potentially able to correct to the downside. Looking towards our last but not least market we like to examine, and that's the crypto space. Crypto had corrected more or less throughout this current week. Starting with Bitcoin, Bitcoin looks actually as if it would weaken further. We see the rising trend line, and this rising trend has been broken. We are, however, still within the upside, right? So the uptrend here, which would be the 109,000 US dollar level. The next one in would be this level, and the over next level would be whatever, and depending on how the market goes, another support zone, which could also be used by traders to observe any market potentially rising. So those zones, I would pay attention to those if I would be interested to buy a Bitcoin. If I would look towards, which I do, towards the monthly trading pattern, however, we can see some clear observation as well that the demand story seems to fold. Whether we can and we should and whatnot look in the Bitcoin market for any technical patterns, clearly the push to the upside, another push to the upside, weaker market momentum, and towards now, the end of September, another candlestick pattern telling us some weakness might occur. I also remain rather careful with this market. Well, the MACD has still been somehow rising, but remains plateaued at a higher price level, telling me potentially that the market might actually start to depreciate maybe, and hence obviously I would be extremely careful. If Bitcoin does not grow obviously or rise, the altcoins will also not do the same. I remain in my Ethereum token. I still have all the full position which I've previously communicated. There's no change about it. I remain in this one. I will honestly also hold it whether the market corrects 20, 30 or 90%. It's not in my trading and for my strategy not a huge position, but it is a position. I would rather opt for rising prices by adding at lower prices. But I did that actually at the expense of closing the new position in XRP, roughly at entry, minus 3% more or less. It's where I closed the trade. I would rather look to enter the market above the high, meaning if we see the market rising, I would like to get my hands into any fresh position. Buy above the high is the idea here. If the market starts breaking higher, and that's what we've seen in the past, yeah? So we've seen this when the market, for example, kind of does the same what we see right now. We see a falling price. I don't want to be in for the or with the idea that the market might even weaken further. But when the market starts to appreciate, then we want to be in. Why? Just because the move to the upside is expected to extend itself. So whether now I lost 2-3%, I pay another commission at the brokerage of choice for another buy trade. But then to see the market maybe moving up 10, 20, 30 or 40% or even more is what I would like to use. So meaning I would like to go into a new position when the momentum starts building up. And hence, obviously, I'm just happy to stay out of this position. The other one, which I've not thought of doing, but is the Solana market. We still were in double digits percentage points. We entered kind of quite at lower prices. Now, I exited this trade as well, and I will do the exact same story. Currently, though, the market looks, and yesterday and today, the market started already to appreciate a little bit. Maybe we see the uptrend forming, but two reasons behind it. I didn't want to see, and the market when I closed the trade was slightly lower. Yeah, so in case you watched this video and you followed our strategy, you might be keen on closing the position. You would have a slightly better trade here. No drama about it, but that's just trading. If the market starts to appreciate further as well, I'd like to see a price here at least above the 235 area. With Solana, it's not the exact same story. And I'd like to lay out why this is. I exited the trade because I looked at it from a general perspective. On Thursday, the stock market was continuously falling. The Nasdaq was low. And I saw if the US indices and equity markets fall further, the crypto markets might continue to move further as well. And hence I exited my position. Solana was performing nicely. So I was just keen saying, look, let's grab a couple of dots here from my profits and just stay out. Plus, I remain in my Ethereum position, and the freed liquidity for Ethereum, for XRP and for Solana is what I would like to leverage on in case the market in Ethereum weakens further, because my Ethereum position is rather big comparing to the other two positions I've just mentioned. I would like to use the capital to just buy in and even into falling prices when Ethereum will go lower. If all the markets will grow to the upside, in particular, what I said earlier on, the Australian dollar, the US non-farm payrolls, the ADP report, the JOLTS job openings, maybe we see that financial markets will see figures which are expected lower and will just buy those figures and causing the markets to rise further on the expense, or on the expectation rather, that the Federal Reserve is going to continue to cut rates, cut in rates, cheaper liquidity, more liquidity in financial markets will obviously use and help the Nasdaq and the S&P 500 to grow. If those tokens, also the crypto tokens, will appreciate, basically they will do just on the support from US indices. So that's my 2 cents in markets. And yes, I've closed the position. I was holding onto it for quite a while. And I thought I'll just like to get rid of those just in order to kind of look into what goes in the US economy. The Chinese market has been rising nicely. Our Hang Seng Tech Index is performing extremely well. Our biggest single share, Alibaba, is performing extremely well. Nike shares are doing somewhat okay. And one of the other of the most interesting markets is obviously kind of coming from the uranium ETF. Uranium, URA, rocking the show, going from one high to the other. So I still like this market. I really kind of am in this position. I've realized a 25% profits off the trades several weeks ago, which I talked to you guys about it. But the remaining of the shares or of the ETF remain in my position, in my portfolio, because I still expect the markets to move higher. Guys, that's my take in the markets. We remain in our shorts in the New Zealand US dollar. The trade had gone extremely sour previously, moving up all the way towards the roughly 0.60 US dollar terms. Now we're way back in profits. We sold the New Zealand US dollar currency pair at 0.5880, and we are now just 110 pips up with this trade. We in between closed our pound Australian dollar short. We were in slight profit with this trade as well. We remain in our pound US dollar short position. So from our side, we still like the open positions, and we shall see how markets perform in the next couple of trading days. I wish you a happy and successful trading week. I hope my sneezing nose is getting better, because I feel kind of something is marching in here, but that's not your issue. That's my personal issue. Maybe it's just time to rest at home for quite a while, or for a couple of days right now. See you then, guys. Take care. Have a good one trading. Talk to you soon. Leave your comments under the video, and don't forget to subscribe to our channel. Thank you. Bye.